Hey traders, John Howell here. The last time we got this candlestick formation, which was just only about a few weeks ago, the market went for a rally. Are we about to do the same thing? Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Now, I'm looking at right now the Sp500. And I'm also looking at the Dow Jones, particularly in this video here. So that's going to be focusing on. Let me just quickly give a little update on the Nasdaq. The Nasdaq could be forming this round sort of head and shoulder formation. Still, we are slowly making our way down. I don't think we're going to see too much of a crash out of the Nasdaq. It just, guys, let me know what you think in the chat box below. But we see some of the most valuable companies in America right now are part of the Nasdaq. So if we have a look at, say, like Apple's got probably the most available funds, free cash on hand than anyone else. Look at companies like Netflix. Netflix is a hugely successful company, and it's only getting better and better and better. And they're just gonna keep making more money and more money as they keep rolling out higher and higher prices and more subscriptions and so on and so forth. We see things like Amazon, right? Amazon is hugely as well too. We see things like Facebook as well too. So we see these companies that do really, really, really well for their bottom line. So that just sort of on a fundamental level, that just lets me know, or that sort of gives me some guidance on, if I'm looking at the Nasdaq itself, and the Nasdaq's starting to get a bit top heavy now. The Nasdaq in itself is probably, yes, we may get a little bit of a pullback, maybe a correction out of it. And if I look at from the high down through to the low, you can see we already had that correction, right? We already had a 12% pullback in the Nasdaq. Is that all that's going to be? Because we are a part of the correction territory, right? 10 to 15% is generally on average what you get out of your corrections. As you know, more than 20% is a bear market. And I feel that having some of the most successful companies in the Nasdaq, I don't think the Nasdaq's going anywhere just yet, which means I don't think the market's going to continue down a lot more. I could be wrong there, but let me know what you think in the comment section below. Moving over now through to the S&P. And oh, by the way, guys, if you need help with this sort of stuff, when it comes to your chart reading strategies or trading systems or what goes into a good trader, or the top biggest mistakes you're making right now that's stopping you from moving forward, or trade management mindset, I'll put it all in the $7 trading course flash sale. So if you go to johnsflashsale.com, there should be a link in the description. Just go to that and you can get it for $7. That's going to be ending real soon. So go do that right now, guys, before the price goes back up to, I think it's $495 or $500, whatever the original price was. So go do that right now, guys. Just $7. It's there to help you guys out. So let's actually reverse right back around to what I started off with this video was that the last time this candlestick pattern formed, we had a rally in the markets. Are we about to see another rally in the markets? So the candlestick pattern looks like this. If I just draw a little stick figure here first, we see that the market goes down, goes down, goes down, goes down, and suddenly the market goes down, rallies down. We may open there, rally down, come back up, and then close high. So you can see how we have a long tail and then we close high. But then we get a bit of follow through to the upside, breaking below all the resistance levels coming down, and then we got a follow through. Let me show you what I mean by looking at this. Look at the S&P chart first, and then we'll go back in time. But look at this here. So last time, you can see the market coming down, coming down, coming down. Look at this candlestick pattern here. The last time we actually had a pullback, then we had this big long wick opened and then closed high. So you had a long wick there. Call it a hammer if you guys are into the candlestick patterns, call it a hammer. We got a bit of follow through the next day, and then we went for a rally. Then now we've got a bit of a pullback, and now look at what's happening. We had a rally down, came back up, and now closed high. So there's a good probability, a real good probability that we're likely to, or first, we should say we need a bit of follow through tomorrow. If we get a bit of follow through tomorrow, then we're probably likely to go for another run. Now, also the interesting thing about this is that if you look at the pullbacks, look at the last 1, 2, 3 pullbacks here. So we're going to use this. Let's just use this here. So let me go down to a black. So we have this first pullback here, second pullback here, and third pullback. That should say 3. So if we're looking at that, you'll be able to see that every time we had a pullback, if I just draw a trend line from the high down to say where the resistance points have been, you can see how it stayed below the trend line. Once we got back above the trend line, out of the pullback, look what happened, we went for a run. If I draw a trend line from the highs and I just connect them all the way down like that, there you can see how we started there. Rejection, 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 rejection here. As soon as we broke up, that's actually when we went for a run. So not only in line with this pattern here, but we went for a run. Now look what's happening. If I draw the trend line, again, very, very close. So if I zoom right in now, you'll be able to see what's happening right up on a close basis. So we're still below this trend line. So that's still a bearish signal. What do we need for big confirmation? We need something like that. If we can get something like that and getting above this trend line tomorrow, then we're probably likely to see a bit of follow through moving into the next week. And you can see that's happening through there. So that's what you want to see. We started, this could be a bit of a short-term bottoming formation, just like on these pullbacks, short-term bottoming formation. We just want to see a close above that trend line there first. If I go to the Dow Jones, you can see sort of, or the same sort of thing. Look what happened here. We had a pullback. Look at this reversal. Big, big, big reversal. Nice reversal. Came down, open low, closed high. Nice reversal here on the Dow Jones as well. And then we had a rally. Now look what's happening. We pulled back. We opened low, came down, rallied back up and closed high. So, but remember what I said before, right? About how on the pullbacks, it's important to get a close above the resistance line. So if I draw a trend line from this last pullback, you can see how if I draw a trend line from the resistance points all through there, just like so, you can see how once again, we started there, rejection, when we stayed below this trend line on the pullback, guess what? Then we're still in the pullback phase, weren't we? Once we broke back above it, then we went for a bit of a move to the upside. Then we went for another pullback. Now if I draw a trend line from the high and I go through all the pullbacks through there, as you can see, look what happened. That was the pullbacks through there. Look what happened. We stayed, as you can see, we stayed above it. In fact, let me actually bring this chart up here, a blank chart. There we go. Much more easier to see. So you can see how it stayed above it. You can see how it stayed above it all through here, but once we got a close above it, which is on this pullback, then we went for a run. Look what's happening right now. We got this sort of the resistance point coming down through to here on the, let's just draw it from there to there, from there to there, roughly anyway, somewhere from there to there. So you can see how we're getting reversal. Are we now, is this pullback here about to end? Because on the Dow Jones, firstly, we've got the reversal pattern. So we just need a bit of follow through first. So we start to get a bit of follow through. If we can get back above on a short term basis, you can see on the short term basis around that sort of 32,800 level, we've got a whole bunch of areas of resistance through there. If I go to my daily charts, my hourly charts, you can see how we definitely have a lot of resistance around that sort of 32,800. If we can get back above, we're probably likely to continue to make a nice move to the upside. So you can see that's what's going on through there. But not only what that's happening on the Dow Jones, but if I squeeze my charts up, you can see that we're actually being in this big wedge. But you can see that in the past, we had this as the starter point, then we had resistance here, then we had a resistance, resistance, resistance. Is this about to become support? So we've got a couple of layers of potentially finding support here and going for another run. Layer number one is the candlestick reversal pattern. Layer number two would be we need a bit of follow through tomorrow, a bit of a breakaway to see that move come again. Layer number one would be the candlestick reversal pattern. Layer number two would be a breakaway. Layer number three would be breaking above this pullback resistance line here. And then layer number four is this long-term, once again, remember this long-term resistance point all through there and all through there as well too. Now we're coming back down. Are we about to find a lot of support here as well and then rally back out? Well, I'm not saying we're definitely going to get a final low here, guys. We do need a bit of a breakaway, but if we get a bit of breakaway, then there's a good chance we're likely to see a move to the upside. So I hope you enjoyed this today, guys. If you'd like to learn, once again, if you'd like to really start to learn this sort of stuff when it comes to foundations, what goes into a really good trader, you got when it comes to chart reading strategies, a couple of good trading systems. When it comes to the mindset side of things as well too, the biggest mistakes you're making, trade management, all that kind of stuff. If you really need some help with your trading, then grab that $7 trading course. Just go to johnsflashsale.com. Make sure you hit the subscribe button, guys. Subscribe if you like this sort of trainings, these sort of market updates, and you'll be able to be notified straight away. And also leave a comment below. Let me know what you think. Are we going to continue this upward phase? I have a target of 40,000. Now, I had one comment yesterday in my video saying, John, yeah, of course it's going to 40,000. No one knows if it's definitely going to 40,000. But they say the market's going to crash first, then it's going to 40,000. What is your thoughts? Do you think we just continue up from here because of the supply demand and what's likely to happen in the economy, or what's happening in the economy as the economy starts to slowly unfold? Or do you think we don't go to 40,000? Do you think, okay, this is the top of the market and we drop down? So let me know what you think in the chat box below, guys, or the comment section below, and I'll speak to you in the next video.